Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the 920 EMA crossover strategy. Today, we're going to do a little bit of a strategy session. We're going to get you up and running on what I would call a relatively interesting day in the markets. I mean, typically, I like to just take Monday. I like to ease into everything. I like to go real slow. I don't like to commit a lot of capital on a Monday. There's a lot of reasons for that over the years. Once you've been trading long enough, sometimes you start to recognize tendencies in your own performance. And over the years, I've recognized that Mondays haven't been very, very good for me. I've always learned that you can make more money if you're trading at the right time with the right leverage than you can sitting in front of these screens 24/7. So today is going to be more of a strategy session. We're going to take a good look at the Euro USD 4-hour chart with that 920 crossover strategy, and I think we're getting very, very close to taking a long trade there. The big story today has been the gap up in the US dollar. The gap down, a gap up in a lot of things like the Euro USD, Great Britain Pound USD. US dollar sort of on the ropes today by about 0.5%. A lot going on in the geopolitical sphere. We're going to be talking more Russia-Ukraine. I know this isn't a news show, but that still is the number one market driver. So hope everybody's doing well. Mark Corp, hi Shane. Did you have a good weekend? No, it was terrible, Mark. I'll be real honest with you. I'm not a negative guy, but holy cats, my University of Montana Grizzlies got pounded. They got pounded by the Montana State Bobcats, and I was very sour about that. I also lost a sizable wager on a North Dakota State football game that I shouldn't have lost. I was up 11 with 3 minutes left, and somehow, some way, they lost the game, and that cost me a cool G. So I'm not really happy. But I tell you what, I had a fantastic Sunday. I got to spend it with the wife. We just hung out, cleaned the house, got everything ready for what's going to be an interesting week. Holiday week this week. We're going to talk more about holiday trading a little bit later on the week. But remember, in the U.S., Thanksgiving holiday is Thursday. I'm going to be in the saddle. I'm going to be streaming. Still going to be looking at the markets, ready to go. But Wednesday, tail into Wednesday, you're going to see volume really drop off as all those institutional traders, they go eat their turkey on Thursday. Friday is interesting. Black Friday trading is interesting as well. We're going to be moving around the stream times this week, so definitely make sure that you take a look at that schedule. I believe I'm going to be going at about 8 a.m. my time on Wednesday, and we're also going to do that on Friday. And the reason why is on Wednesday, it doesn't really do anybody any good to do an afternoon stream when the markets aren't moving. We're going to go a little bit earlier. So I wanted to just clear the air there, but thank you. Bobby Bob, Shane, hope you had a great weekend. It was rough, Bobby. Hope you guys had a good weekend as well. Dibble, always a pleasure, Dibble. Hope everything's well in Europe. These are interesting times. Clive Harrison, hi, Shane. Bad news this morning from Connor. Yeah, let's just go ahead and address that right now. I've been working with Connor for the last 2 years. And fantastic trader, smart kid, and I say kid in a loving fashion. I mean, he's a lot younger. He's about 20 years younger than me, and he's smart. He's got his head screwed on straight, and he's going to go do some other things. He's got some opportunities that he wants to pursue, sort of in the Middle East. So I'm really pulling for him. I think that as a trader, I've really, since he's been here, I've watched him grow. And he knows the smart money concepts. Unfortunately, that's going to be a big loss for us because I know a lot of you guys just love price action trading and you love smart money concepts. That's not really my cup of tea. I mean, I understand things like a liquidity sweep. We're going to talk a little bit about that today. Fair value gaps, all that stuff. But it's one thing to know a strategy, and it's another thing to be able to really trade it. And while I can talk about smart money concepts and I can talk about price action, I can talk about basically anything, am I a true expert in that? And typically you don't become an expert in anything until you start. I always say betting because I'm a bettor at heart. I mean, I'm a gambler at heart, but when we trade, we shouldn't be gambling. When you start wagering money on a system, that's when you really get to know it and understand it. I don't trade real money with smart money concepts. I work Fibonacci retracements. I also do some of this crossover stuff that we're going to be talking about today, but I'm going to do my best not to miss a beat. But I'll tell you what, you guys start talking fair value gaps and order blocks and all that stuff. I know what you're talking about, and I can give you the analytics, but I'm not a true expert in that area. He is. So Connor will be missed. Been working with him for 2 years. We made a ton of videos together, sat around, talked markets for hours and hours and hours. I got an opportunity to meet him in London a few years back, so it's a big loss, but he's going on. He's going to go on and pursue his career elsewhere. So we always wish him the best. If you have any questions for him, be sure to reach out this week. This will be his last week in the saddle. I'm going to meet with him tomorrow and see exactly how he's feeling about his next chapter. So he will be missed, but we will still be here. I will be here. Now, it's going to be a one-man band, at least for a little while. So if you have anything that you need inside of the trading room, be sure to reach out to me personally, and I'll do my best to service your needs as best I can. As far as vacations and things go, I do have some vacation time coming up in December, so there may be a period of time where there is no live streaming on how to trade. But remember, there's always going to be these videos. How to trade, our YouTube channel, it's growing. small channel. We also have Forex Signals TV, which is a much bigger channel. You can check out our live streams here, but also our videos. We got a lot of videos, and some of them get seen, some of them don't. I mean, this rally-based rally video hasn't been seen at all. I think it's one of the stronger videos that we've made. Inversion fair value gaps. Connor's stuff's going to be there, and some shorts. Today we're going to be talking about a 920 short that was a very, very popular short. Some of these videos get seen, some of them don't. So if you want to know anything really about trading or the markets, tune in. Like that one's got 66,000, but some of these are just in a few hundred. So a lot of strategy stuff there, a lot of content there. All right, 920 EMA. I've gone on long enough, but I appreciate you bringing that up, Clive. It's important we get that, sort of air that out right away. All right, 920 EMA. Let me see, Clive, one more question, then we're going to go ahead, and then we got another question we definitely have to talk about that I got in the live chat today. It's a great question. Let's see right here, Shane. So when did Nick leave? Nick left last spring. He left last spring, about last April. Worked hard with Nick for a couple of years. Know him very well. I actually just spoke with him the other day, and he's doing well in his new pursuits. So he's around. If you want to find Nick Quinn, he's out there. So just go ahead and run your Google search. You'll find him. All right, in any case, Euro USD, this is going to be the 920 EMA strategy. Now, we're going to touch on this, then we're going to do some market analysis, talk a little news. But right here, your 9 is the red one. When the red one crosses over, or excuse me, crosses under, you're going to want to go short. And when it crosses over, you're going to want to go long. 20 EMA, that's your long-term EMA. That's what gives us a good idea of what market state's doing. Our short-term EMA, our 9, when the 9 crosses the 20, that's our signal to get in the markets. Now, right now, I've got a 4-hour chart here on the Euro USD. You'll notice our RSI down here. This is the qualifier. So think in terms of qualifying. So if you're going to make a trade using this strategy, it's a very simple crossover strategy, but a lot of folks say, Shane, when you get into flat markets, you'll get killed trading this way. And I say, yeah, you will. But if you're trading at the right times, if you understand what time frame to use, if you understand when the market's going to be active, and if you also qualify things with like an RSI, you can improve your chances of success dramatically. So when I look at a 920, I say, okay, what do I want to do? Well, okay, Forex pair, Euro USD, probably the most heavily traded thing in the world, aside from gold. We're going to talk gold and silver here in a second, and some WTI. But when we take a look at what we've got going here, you've got a crossover. Is that going to be our sell? Well, were we in overbought or oversold territory? We wouldn't have taken that sell, but what are we doing right now? Right here, this liquidity sweep, this wipeout, this big-time wipeout we saw last Thursday, which was basically a break beneath last year, or excuse me, the yearly low. You remember those charts I had up, yearly low, bang. That wiped out a tremendous amount of stop losses. Retail stops get run, and what happens? Institutions step in, they buy the market. Now what do you got? You've got a pending crossover here. We were in oversold territory on that RSI. That means we were beneath 30. All right. Now we're basing. Now what do you got? You have an opportunity maybe to get in on a crossover. You're going to get that 9 to cross the 20, and then we're going to bid the market. And right now we just started a new 4-hour bar. Check in on this chart in about 4 hours. As soon as you get that crossover, you're in oversold territory. That's going to be your position long here. And how are you going to trade this thing? What do you want to do with it? Well, there's a lot of things you can do. The first thing I would do is locate my stop loss. First thing I do in every trade, I have to know when I'm wrong or else I don't take the trade. Stop loss is going to be right beneath this liquidity sweep here. If you want to put it there, that's probably a pretty darn good place. That right there, though, that's a significant risk. Where else can you put it? You can put it right beneath that swing low. Bang, open, gap up. That's a gap. That's why we don't really hold positions over the weekend. You can get absolutely torched when that happens. You can lose a lot of money fast. Nice big sell-off right there, though. There's sort of your inverted hammer, and now we're looking to get that crossover. We were in oversold territory last week. Can we pick an intermediate-term bottom here? Yep, I think so. So right there, bang, there's our indicator. Okay, it's time to look to buy, and there's our trigger. As soon as the 9 crosses the 20, we go long. That's as easy as it gets, guys, for a trading strategy. Now, there's been a lot of folks that are sort of asking a lot about EMAs. They're asking a lot about this 920 strategy. We're gonna take a look at a video. Potentially, we're gonna get one in the works here for the next several weeks, and we'll just put out a full release so you guys have a good opportunity to understand the strategy. The biggest thing about a strategy like this, you've got to know which time frames to trade it on, and you've got to know when to trade it. For me, I really like the 4-hour chart on the Forex pairs. It gives us a great opportunity to really take positions in a market that is so huge and saturated with orders. Sometimes if you dial this thing down to, like, let's say a 5-minute chart, I mean, you can certainly trade this. You can trade this type of strategy right there. That would have been your sell. RSI is overbought. Bang, you're looking to sell. Right there would have been your sell. Stop loss is up here. You caught most of that move. But That's more of a scalping approach, and I highly recommend if you're going to go to a 5-minute or a 1-minute chart using a strategy like this, you've got to know when to trade it. That New York-London overlap. If I was trading a 5-minute chart on Forex pairs, specifically the Euro-USD, that's probably all I would focus on. New York open, London close, that overlap, got about 4 hours there, somewhere in there. I would definitely be looking at that. Something to think about there if you're interested in trading this strategy. So right here, be sure that if you're an active trader and you want to trade, get on over to Switch Markets. That's our partner broker and one of our sponsors. So get over there, 100% bonus, $2 a lot cash back and an iPhone 16 giveaway. Wow, I don't have an iPhone. Some of you need an iPhone. Get over to Switch Markets Black Friday promotion. We really do. Eventually, you're going to have to figure out where you're going to trade. And Switch is a pretty good opportunity to get in there and get a shot at an iPhone 16. Like I said, I don't even have one of those. Win it. See what happens. Debron, good to see you, Debron. Welcome to the room. All right, guys, a couple other things that we need to tidy up here before we sort of get on with a deeper discussion of, we're going to talk 920. We're going to run that on some futures trades here in a second. But I want to go back and hit on this. Natural gas. Natural gas right now is up about 4.3%. This was the Bollinger W from last week on a 30-minute chart. We talked about this last Friday, and I said, boy, given this geopolitical situation, bang. I said, you want to be long gas. You don't want to be short. Natural gas right there. What do you got? Nice little bottom there. Pull back. There's your second bottom. There's your entry point, your big bar. That's beautiful. If any of you got that nat gas trade and actually held it over the weekend, you said, Shane, don't hold things over the weekend. You just told us not to hold things over the weekend. I said, listen, if you want to be long and you want to trade over the weekend, think about commodities. Now, we specifically said, don't go home short gold. Maybe you'd have made some money today. Don't go home short WTI. WTI is also getting hit. Don't go short natural gas. Natural gas is the one commodity that's destroying all the rest of them today. I look at today's screen and I look at U.S. oil, and boy, there's just mixed. There's so much going on right now, and the sentiment. This is one of the reasons why I don't pile on the leverage trading Mondays. I don't. But if you did get this natural gas trade, that's a beautiful W. Bang, bang. You should have cashed out probably already, taking the money and run. So something to think about there. So why is everything going crazy here in the commodity markets? Well, it's real simple. I mean, it's Russia, Ukraine. I was listening to some alt media. I'm not going to tell you who I listened to. I listened to all of them. I will say this. You had a tremendous, and I mean a tremendous, story that broke probably 3 hours ago, and it was in the New York Times. I could not find it online, but I saw the guys going over this on the podcast I was watching, and in the New York Times there was talk about giving Ukraine nuclear weapons. That's a clear and present danger and a major escalation. And we've got a lot going on here. And this Russia-Ukraine really starting to dominate the narrative. It's really starting to dominate sentiment in all the markets. Now, if you take a look at the markets today, you've really got a lot of optimism. And we saw this happening last Friday when we started to see reports that the NATO chief was in Mar-a-Lago. They were talking peace. They're talking about maybe negotiating a deal. That sentiment's spilling over today. I mean, you've got really a nice big bull run in the Dow. You've got a tremendous sell-off here in gold. Right now, gold's off, 3.5%, something like that, 3.3%. Silver also getting smashed down around that 30 level. We're going to talk about probably buying retracements right now. I think that this correction right here is probably short-lived. But listen, the question that I was asked earlier in the live chat here at How to Trade, I got to read it because it's fantastic and it really speaks towards what we're talking about in the news. Good evening, Shane. During your stream, could I get your views on gold and silver? Of course. Do you still have a long bias? Yes. How could the ceasefire affect gold and silver? It's going to bring in a correction. Also, Trump's victory and the laws and appointments that he's setting in action will send him bearish to the short and medium term. I agree with that. But geopolitical instability could send gold and silver back to the moon. Your input's greatly appreciated. Well, I sure appreciate that. That was from Ivy here in the room. More than happy to give my opinion on all this stuff. More than happy to do it. Just understand that when I start talking about money and I start talking about, markets and things, these are my opinions. I will show you the technicals, and I'll show you why I believe what I believe. But right now, the news cycle is incredibly volatile. In my view, what you're seeing in gold and silver is a fairly major correction. Fairly major correction. Birds lover, good to see you, birds. This is a fairly major correction. Now, what we've got to do is we've got to figure out, okay, do I want to be long or short gold? I don't want to be short gold. I don't want to be short gold. And the reason why is one move out of the Russia-Ukraine situation, one move out of the Middle East, and gold spikes. It goes to 3,000. It happens fast. So I don't really want to be holding shorts. That being said, a lot of folks made a lot of money being short today, gold. So let's go ahead and look at the 4-hour chart. I love the 4-hour chart on gold. You can see right there, there's sort of your compression. There's your order block. There's your head fake up above 2,700. Then just an absolute crash off about $100, really beginning on today's open, Sunday's electronic open. So that's a major sell-off. For me, I see it as an opportunity. Now, a lot of folks stepped up and sold. You can see right here, you'll see our Fibonacci's. Relatively simple. Bang, bang. There was your pullback to 50. There was a lot of shorts that came in here right underneath 2,700. That's great. If you got that trade, fantastic. I always say that, there's a lot of money to be made in the markets. I'm going to let, the folks that are smarter than me make that money, but I know what I want. Now, take a look at this 4-hour chart here. You can really see the last, I don't know, couple weeks of action. This right down in here, about 10 days ago, that's an interesting order block, and it came across the board right around 25.50, 25.75 to 25.50. Now, we're going to have a write-up and a trade idea on gold here later this afternoon. I got to wait for these markets to settle out a little bit and evaluate the news cycle. But right now, it looks to me like if you're a smart money concept trader, if you love order blocks, something like that, that's probably going to be a pretty good bid. Now, the real question is, does that coincide with what I want to do with my Fibonacci's? Interesting, isn't it? Weekly chart. Okay, we know our long-term schematic is relatively simple. Bang, 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 big rally. Now we're selling off. We're starting to establish an area of fair value. I'm not sure if this TPO is going to be much help because we don't have any volume really on a spot market. But you can see right here, this compression is really starting to become evident. So when we were running through like our monthly numbers, for instance, when we went to our monthlies, you can see right here, what do you got? You got a nice pullback there. You sort of bounced. Spike low, spike high. Okay, that's January. That's your yearly range, guys. We're almost finished with 2024. There's your yearly range. That's the buy of all buys down there. That's the one we want. Right around, 24.80, somewhere in there, maybe 25 even. We almost got it earlier this month. The real question is are we going to get a chance to get it? I think we do. I really do. I think we do. But for right this minute, let's go to our daily chart and see what's happening. Now, what do we have here? Okay, there's our long-term number. Of course, we're going to buy that. 24.85 all day long. No question about it. What do you got going here, though? Compression. That's our 4-hour order block right there. Nice hammer. Hammer formation, inside candle, and it's a doji. Very, very tight. Why was that tight? That was right before the big war escalation that we saw 1, 2, 3, 4, 5, 6 days ago. It feels like an eternity, but it's only been a few days. What do we want to do? I want to buy this thing. Where can I buy from? You step up and buy right there at 26.05, something like that, 62% level, the back end of our golden zone. It's fantastic. That'll give you an opportunity to get in and sort of get dirty to the long side of the market. Love it. Love that more. 25.75, that's right down in this order block area. We get in, we shade our entry to the long side right there. 78% is the line in the sand. You're going to see bidders there. I can't say guarantee. You will see bidders there. Can't really promise anything either, but you'll see bidders there. So that's gold right now. I think we're in a major correction today, of course, 3.5%. And a lot of it has to do with our news cycle. Now, there's been major escalation. I mean, the folks that I've been listening to today, it's no secret. They're some of the biggest in the world. I listen to all sorts of talkers. I listen to conservative talkers. I listen to liberal talkers. I don't really believe anything that comes out of the mainstream media. I sort of view that as being a cross-section of what's really happening in the news. I'm looking at RT. I'm looking at Al Jazeera. I'm looking at NBC. I'm looking at CBS. I'm looking at all of it. Fox. I'm looking at all of it. And right now, this is what matters to me. Poly market, not a very big market, only about, 710,000? That's not a very big market. That's small volume. Will Russia use a nuclear weapon in 2024? 4% chance, 3% chance. We were way up there not too long ago before the election, and now we've really tanked. That's a good sign. That shows that maybe we're seeing some de-escalation. So what would that idea really do to the gold market? It would tank it. That would be your geopolitical uncertainty leaving the party. That's fantastic news. So I'm watching that market very closely because it's not very big, but if somebody comes in with a couple $1 million and wants to make a play, that means they know something more than likely. You start gambling up in the tens of thousands and the 50s of thousands and the hundreds of thousands and the millions, that's very serious business. And those folks, they are not just doing this for the rush. They're doing this for money. And so I'm watching markets like that very closely because it's important that we understand the sentiment. And the only way that we can do that is when there's money involved. All right, let's see if we can find a 920 trade on this gold. Is there an opportunity potentially to buy this gold market? Okay, 5-minute trade right there. That's your Euro USD. I mean, theoretically, you could have taken that long. I'm not interested. 4-hour charts is what we want. 4 hours here. And let's go to our gold chart. Do we have an opportunity potentially to buy gold or sell gold? Look at that. It's telling us to sell gold. There's your 9. There's your 20. There's your cross. Your crossover is developing here. Another 40 minutes on the gold market. Remember, time frames are a little bit different. They're going to be a little bit different. We're looking at a pure 24-hour time frame for the spot gold market. What do you got? That right there, bang. That's going to be your sell. Why would it be your sell? Because you're in overbought territory on the RSI. Shane, you just told us to buy it. I said, no, hang on a second. Can we still sell from here? Damn right you can. You're looking at selling maybe 26.20s. I'm really not looking for any bidders to step in until 26.10. There's a $10 window in there where you can make money on that short. Nothing wrong with that. You can make money on that short according to your strategy. And you can still look to bid down here where we were just talking about bidding. So if I'm looking at this, I'm saying, okay, we've sort of got the sell developing. Another 39 minutes, I'm probably going to be looking at that trade. Absolutely nothing wrong with going short there until you get to macro support. Nothing wrong at all. Remember, if you're going to trade the 920, there's 3 tenets. 3 tenets, especially with RSI confirmation. Number 1, the 9 has to cross over or under the 20. That's our trigger. That's our signal to get into the market. Number 2, RSI. It's either got to be an overbought territory above 70 or an oversold territory beneath 30. If you can do that, if those things line up, just think of it, it's like cracking a safe. It's like working through the tumblers. As soon as those tumblers line up, click, 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 bang, safe opens, you make the trade. Now, are these trades 100%? Of course not. No trade is. What you got to do to be successful is understand what to do with your stop loss and your profit target. Crossover strategies are a bit tricky. They mess with people because what happens is you get the crossover, it goes in your favor, and then typically it retraces. So you're up, you're down, you're up, you're down, you're up, you're down. The number one thing that you have to remember if you're going to trade a crossover like a 920 is you've got to know where to put your stop losses. Right there, right above that swing high. That's where I would put mine. Right at the top of market structure, bang. Okay, Shane, where would the profit target be? I'm always a fixed risk versus reward person. I believe in maybe just putting on a 1-to-1 or something like that, but a lot of folks don't like that. A lot of traders, a lot of professional traders laugh when I say 1-to-1 is the ticket to happiness. They don't believe it. I would be shooting right down there for the bottom of market structure. So the question does remain, okay, I'm not in the market yet. At what point would I get in? You got a couple of options. Number 1, when this crossover develops here in another 37 minutes, you could sell right there on the bar open. You could do that. There's nothing wrong with that. What I like to do is wait for a retracement, get a little bit better price. Odds are you're going to get that retracement. So bottom line, short term, you want to be short gold, but long term, don't ignore these levels. These levels are a big deal. And quite frankly, if we don't get our crossover and we see the big crash right here, I would rather bid 2605s than sell down there. Be careful with your entries if you're using the 920 here on gold today. All right, let's take a good look at the silver market here. I think it's important. I do want to sort of show you a couple of these shorts. This one was really incredibly popular here. That's not what we're looking for. Pardon? I got 50 million screens and everything going. There we go. This one right here. Interesting. I'm surprised it got the traction that it did. Learn the 920 EMA intraday strategy. Check that short out. It's only about a minute long. It's going to be a lot shorter than what we're doing here today. And then also the 920 strategy in action. We execute a few trades and sort of show you exactly how to do this. That's what we're going to do right now. We'll see if we can execute a trade. But definitely check those out. And then one other thing we've been working on, this video is going to be in edit this week, and we're going to get it out in the next few weeks. Liquidity zones, we're talking about the liquidity sweep strategy. If you're interested in smart money concepts and liquidity sweeps, we made a pretty good video there that's going to show you how to get up and running, spot liquidity zones, and capitalizing on liquidity sweeps. So right there, what we've got going, major crash here. So my other question that I was asked was silver. Okay, what do you want to do with silver? I go, boy, I'll tell you, silver's interesting right now. Silver is not really, it's performed incredibly over this year. And you listen to the silver bugs and they say, you got to be long silver, you got to be long silver. And I go, okay, that's great. But it's coming off. It's coming off in a big way. We went up and touched 35, and since then, you're down to 30. You're off big here if you're long silver. And I would honestly still bullish silver. The real question is where can we get long at? Let's do the same process we just did on gold. Nothing wrong with it. Works just fine. Spike low there, bang. Spike low, spike high. What do you got? There's your pullback. What did you have right there? Beautiful trades, what you had. Bidding 29.72s. Great bounce. We had a silver piece out, an analytics piece that we put out on X, and also some other platforms. I believe last week, talked about that level right there being incredibly important. That was a great trade. If you got that one, fantastic. Now, what do we do now? Of course, 28.30 is a beautiful trade. You got a 13-month EMA down there at 28.21. You got our 78% level at 28.30. Yes, please. I would love to get that. Can we sell right now? Of course. Absolutely. There's no problem selling right now as long as you recognize that 62%. That's going to be a big-time bottom, and it's going to be tough to beat. So what you got to do is you got to get great trade location. What do you have right here? There was your trade. Bang. We went off that golden zone. Nice rally, compression at 50% to bang. Now we're going again. So let's dial it down to a 4-hour and see if we can find a retracement area to sell. There it is. Spike high, spike low. Last 8 hours have been absolutely dreadful for silver bulls. I hope you weren't on the wrong side of that one. That one hurt. 30, 37. Bang, bang, bang. There's your sell. Sell that in the short term. You're looking to bid this low. Be very careful down here, though, if you're going to bid this low in silver, because once this area gets washed out, that big negative candle, that swing low right there at 29.68, when that gets washed out, we're going very low. We're going to go down to our next port of call, which is going to be down there at 28.30, 78%. 13-month EMA, that's huge. Don't ignore that. EMA is huge. 13-month EMA is huge. And then also 78% is a monster level. I would be very, 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 very careful shorting from there. You want to buy down there. But for right this minute, I have no problem with anybody shorting that wants to take a shot at maybe a run down here. No problem at all shorting from there to here. Just understand when we get down there, there's going to be some bidders. But if this area gets saturated and gets washed out, look out below. Look out below. Still bullish, though. Long term, still bullish, but we have to start changing the way we think. The only thing really propping up these metals markets right now is the geopolitical uncertainty. No question about it. That's the only thing. As soon as that's gone, look out below. Why would I say that? Because our monetary policy is starting to go hawkish. All of a sudden, we're not going to get the rate cuts that we thought we were going to get. I wrote a big piece last week on Trump's tariffs and the trade war. Check it out. I talk a lot about interest rates in there. I talk about tariffs and all of it. What's going to happen more than likely here is you're going to see a Fed dial back its previous commitments to slash interest rates throughout 2025. They're going to dial down expectations. And what that means, it's going to lead to a hawkish U.S. dollar, which is really tough on commodities. Remember, as commodities rise, typically the U.S. dollar goes down. Well, think about that inverted. As the U.S. dollar rallies, commodities go down. Why? Because my dollars are worth more. I get more for my dollar. You have to give me more oil for every dollar I have. What does that do to price? It sends it down. So if we're looking at something like this and we say, okay, what do you got going here? I'd say, well, you've got a major correction in the crude oil market today. Commodities are down across the board. Am I still bullish or bearish crude? The geopolitical uncertainty is the only thing holding crude oil up right now. We know that Trump's going to drill, baby, drill. There's going to be a lot of oil coming onto the market in the next 18 months. We know this. The only thing keeping price up around $70 is your Middle East conflict, the Israel-Hamas, the Israel-Iran, number one, Russia-Ukraine, number two. World war will send crude oil to the moon. I mean, if in fact you start seeing tactical nuclear weapons or all these things that really scare everybody, if some of that stuff comes to fruition, crude oil could go to $200 a barrel, and it could happen overnight. Believe it, it can happen. Remember, there are no rules. Anything can happen with these prices. So that's, to me, that fear is the only reason why we're at 68.83. Now, I've really gone on and on and on about 64.50 being huge for WTI crude. It's a huge level. I'll sort of recap it for those of you that are new. I've hit this so many times I almost feel bad and just feel redundant. I don't like saying the same thing every single day, but this chart right here is a monthly chart for U.S. oil. What all the analysts are missing, and I'm not saying that we're the smartest people in the world because we're not. There's a lot of folks out there that are brilliant, a lot smarter than me. The true price of crude oil in the COVID was negative $40 a barrel. Negative 40. How can it be negative 40? Because there was no place to put it. There was no place to put it. If I had a barrel of oil and I was bringing it to the market was saying, hey, guy, we got nowhere to put it. I mean, what are you going to do with it? I was like, well, I have oil, though. Well, we don't have anywhere to put it. They had to pay to store the oil. First time in history. Okay, craziness. That's the true low of this market, negative 40. The high up there, Russia, Ukraine, bang, 129.96, 130. There's your pullback zone, 64.80. Like I said, listen, I've been it's tough to nail these down perfectly on the fly doing this on a monthly chart, but I'll say that between 64.50 and 65, that's a big deal. And you've seen that we've tested this area several times. That's been the bottom of this market. I fully expect in a Trump administration, if you don't have world war or if you don't have major escalation, this thing's going to tank. The reason why, more supply coming onto the market, number one. And number two, the other thing is if the interest rates go up. If the interest rates go up or they stay firm, that's going to be hard on commodities because the U.S. dollar is going to go up. What's that going to do to oil? It's going to send it down. It's going to be bearish pressure. We're also going into the winter months. I think we take out that support zone upon probably shortly before Trump's inaugurated, or if he is inaugurated. God only knows what's going to happen in this world. But if in fact that happens, you will see a crash in crude oil. It's going to go down probably 44.75. I don't know that it goes beneath 50, but you're going to get bidders right there at 50. And, that's about what, $15? I would say $15 from where we're at right now. Something like that could be absolutely huge, and I think it's coming. Now, I can't tell you to sell it because we could be here for the next 3 months waiting for this thing to crash. How do we trade it right now? It's a good point. It's a good question. First thing I would do with U.S. oil is understand that markets have memories. You definitely want to be looking at that swing low right there. That swing low is huge. That's a yearly low. Okay? September's low is down there right around 65.29. You probably want to be a bidder between 65 and 64.50. Definitely want to be bidding that. You don't want to be selling down there because there's going to be bidders in the market. Now, do you want to hold a short right now? It's hard because of the geopolitical situation. I would much rather be short than long. Much rather be short than long crude oil right now. But if you do see the escalation, the news that was breaking out of the New York Times today it's really tough because the administration right now, the Biden administration, is talking about giving Ukraine nuclear weapons. If that happens, I don't pass judgment on anything. People, whatever. But what I'm saying is that's a very tense situation already. And if they are armed with nuclear weapons, then you're going to see two sides that have nuclear weapons. Ukraine's not a part of NATO yet. Probably will be at some point. It's not yet. That means that it's going to have carte blanche with those nukes, and that, believe me, is going to show up in your markets. Be very careful this week. Watch that news cycle. Be careful. Caution's the better part of valor, I've heard said. Cautionary is a good word. If you wanted to be short right now, I believe it's the right way, but as soon as that news breaks, or if it does break this week, crude oil will stagnate somewhere up around 75 probably, just because a lot of paranoia, a lot of angst in the market. Right now, we're looking at our VIX. Our VIX is down today. We're down around 15 with our volatility index. That's a good sign. Stocks are up. How would I trade crude oil today? You guys pretty much know what I like to do. 30-minute chart. What do you got? It's an old song, boom, boom, out go the lights. You're getting crushed here. You want to be on the short side of this today. Is there any way that you can do it? A couple ways I would design my Fibonacci's, something like that. Pull back right up there to 69.66 is going to be a money sell if you can get it. Don't know that you'll get it. You can see right here, what did we have? There was your wave. There was your pullback. We failed just short of 38%. Anytime you see that, forms a hammer, a 30-minute inverted hammer. Coming off big there. What could we do right now? Number one is recognize your time of day. You only got about an hour left of premium crude oil trading. I would be very careful taking a position either way. If you wanted to buy right now, you'll probably be okay. You're probably going to rotate. It looks to me like you're going to rotate up to around 69. But fighting intraday trends is just a bad idea. It's a good way to lose a ton of money. I would wait. Let me see. Staslov, good to see you, man. Let's see. Gold buy, why sell? Yeah, I talked about, we just recapped gold. Go back and watch the stream. We got a little bubble there where you can sell right now until you get down to that. Our 920 EMA told us to sell here in about the next 30 minutes, but be careful with 2605. You probably want to be long from down there. And you damn sure want to be long from 2575. That 78% we talked about. Go back, take a look at the live stream. We went over gold in depth just a second ago. U.S. oil, what do you want to do? I probably would be out of this thing right now. I don't know that I think all the good trades are probably gone for the day. But if, in fact, you wanted to bid, I have no problem with this. Scalping spike low right there. Spike high. Swing low, swing high. There it is. 68.42. There's your bid. Coming into view, too. You're only about 40-something cents off. Perfect world, you get that bid towards the end of the day, about the next hour or so. You get that bid right in front of that 2:30 p.m. Eastern. That's probably going to be money in the bank. They pay us to wait. They don't pay us to trade. Remember that. For me right now, though, not really interested in doing anything with it. The move's already in. If you sold up here, great. But right there, be careful, 68.42. That's a pretty darn good support zone. All right, everybody, let's go ahead and look at one futures contract. E-mini S&P 500. Ugly stuff, very, very tight. That doji days are the ones that pretty much end everybody's trading account. I mean, think about it. I mean, when we show up to trade, there's only one question: up or down, buy or sell. Well, I guess that's two questions. At any given moment, the market can go up or down. That's your decision. Do I want to buy it? Do I want to sell it? That's where the technicals come in. A deeper understanding of the fundamentals can really help you get rid of a lot of those losers. Nice compression, nice doji. That's a really tough day to trade. Be careful here, though. That's where you want to sell. All-time high, doji. What you're seeing here's a daily double top setting up, so right around 6,000, 6,050. Yes, please. That's where you want to sell from. Be careful, though. If you do see this sort of breakout, the next few days, we're going to cover this all week, but the next few days, what do you got here? There's your cup. You get a few negative days there. There's your handle. Cup with handle, plus a potential break up above 6,000. I would be very careful with that. Be very careful holding shorts. But if you want to scalp, markets have memories. You can scalp from right up there and be okay. Let's go down to a 30-minute chart. This would be my bread and butter. Okay, this is fairly self-evident. 30-minute chart. What do you want to do here? There was sort of your spike high. That's your opening bell. Ding, ding. Open on the Wall Street. Love it. Cash open. A nice clear range. These are sort of tough to come by. We don't want to buy anything just yet. We want to be looking to sell. Take a look at this, though. That was your scalp. Now, again, we're too late for this, but 6,004, 38% of the U.S. session this time of day, bam, we rotated right up there to 6,004. You can see that pullback right there was a beautiful scalp. Let's go to a 1 minute. Take a look at it. That's good stuff. That's good stuff right there. Bang, 38%. There's your sell-off. Come up, hit it again. Bang. Now what? Now we're breaking above it. Do you want to buy it or sell it? Buy it. Where's the market order at? Buy it, I said. Okay, there would be your position. What are you really looking to get accomplished now? You're fighting the trend. There's no question about it. You're fighting the trend. Intraday trend is down right now. S&P 500 is off. I mean, you're in positive territory, but you saw the U.S. session was a sell-off. This trade's money in the bank if you take the long right there. The real question is how does it unfold? I love this 1 minute compression. Bang, nice move, nice correction. This area that was resistance is now support. I don't really have a problem holding longs here. When would I get out? I wouldn't wait around too long. I mean, we're playing for some points there. I mean, just every tick's, what, $50 with 4 lots down. You're going to be looking to get out beneath that swing low. An incredibly tight trade, but you're looking to make a few $100 on it if you can get this rally right there up over intraday resistance. You know, right there we're sort of mucking around. 0, -50, 0, -50. I'm going to be watching this. What do you got? I mean, this is a 1 minute chart, but what do you got here? You sort of got a bullish pennant. Bang, there's your break. You're above the upper Bollinger Band, little P formation. It's going against us. You just got to wait. Is this going to be the sell or a buy? Well, we're long. Our trade location's not real great. Probably could have went long from right there. That would have been better. We'll wait and see if the market rotates higher for us. Let me see. Bobby Bob, Shane, Bitcoin was almost 100,000, but it's back at 95. Do we still hold? I don't know. That's a tough one right there. If you're looking at Bitcoin, let's go ahead and pull a chart. There's your 1 minute chart. I mean, it's just absolutely getting hammered right there. Whew, that's ugly. What I would say is let's dial this down to a 4-hour chart and have a look. Talked about our key levels. What happened right there? 99.8. Now, if you're long and you made a lot of money on the run up to 100,000, as soon as price gets up to 99.8-ish, you know there's sellers in front of 100,000. We talked about key levels a lot. So now we're back down to 95, and it's sort of, if you're waiting for 100, do we get there? Boy, I don't know. 100 might have just stuck up and just showed you, sort of everybody showed you their hands, said, yeah, that's going to be big-time resistance. Do I want to be long or short Bitcoin? Gensler's out at the SEC. That's huge. That's huge for crypto. That's a huge bullish market driver. Something like this, though, nice compression break, right around 90,000. Compression break. What do you got right up here? You got a pullback coming. Let's go to a weekly chart and have a look. I like buying dips right now. Spike low. Yeah, if you got like an 87.2, that would be my long entry. You got a real good chance of cashing in a little bit there. But as far as do I think it's going to 100? Boy, we already sort of went to 100. It didn't print 100 exactly, but 99.8. That's within $200. And if you bought this thing down at 15,000 or 25,000, man, I find it really difficult to stand in there when you've already made a 4 or 5x on a trade and you're waiting for the last couple $100. Man, I don't believe in that at all. I don't believe in that kind of trading. So if it was there, it was there. Is it a hold? It depends on where you bought from, Bobby. I mean, if you bought from 50, if you bought from 75 or 90, we were talking about buying 87.5s the other day. I probably would have already taken the money off. No one ever went broke taking small profits, believe me. All right, I've run way long here today, guys. This Bitcoin, though, interesting. Gold, fascinating stuff. Looks like you're going to get your sell right there. Just be careful with that market structure. Let's go ahead and throw Bitcoin up here. Why not? Let's try the 920 on Bitcoin. There it is. Overbought territory, back Thursday. Bang, right here. Crossover, 9 crosses the 20. Where are you? You're short. I want to buy my retracements. If you wanted to go short right now, you could. The crossover's there. Right there. Interesting stuff. If, in fact, you're in the market today working the 920. Let's go have a look at our intraday trade here. We're in pretty good shape, really. Getting a little bit of compression here, but this area is acting as support. We'll see, in fact, if this grinds higher. I would be really surprised if you don't see like a 6,008 or 9 up there. But we'll just wait and see how it pans out. All right, everybody, I want to thank you for joining me today. Once again, holiday week, all right, holiday week. You're going to start to see volumes really drop off towards Wednesday afternoon. That's going to be brutal. It's going to be tough trading. I don't want anybody to lose money Wednesday afternoon. I also don't want anybody to lose a ton of money Thursday. U.S. markets, not going to be much liquidity there. On the futures open, though, in the afternoon after everybody's eating their turkey and everything, a lot of times we see big action Thursday afternoon. So we're going to be there and we're going to be waiting. Friday's going to be interesting as well. If you're in the trading room, be sure to check your live stream schedule. It's going to be in flux. And yes, Connor, this is Connor's last week. So whatever you need to ask him this week, because after this week, he's going to be pursuing other interests or other pursuits. All right, everybody, I want to thank you for joining me today. Have a fantastic trading session. If you have any questions, drop by howtotrade.com. Send me a private message. All you got to do is click on my picture. Send me a PM. I'll get right back to you. Be sure to check out our YouTube channels as well. Like and subscribe if you like what you've seen. But if you're definitely just seeing us for the first time today, there's been a lot of that. Cruise by the trading room. Ask me a question. Say hi. All right, everybody. Thanks for joining me. Trade the action well, and we'll talk soon. See you.